While Anthony Albanese promised Australians lower household power bills during the campaign, thanks to even more allegedly cheaper renewable energy sources, the reality is actually very different. Today, business leaders warned of, quote, an apocalyptic damage due to spiking energy prices, especially oil and gas. And it's not just far higher energy prices due in part, of course, to the Ukraine war, plus the cumulative impact of climate change measures over the past decade or two that's headed our way. Gas is also a feedstock for fertiliser, plus a vital input into many manufacturing processes. So shortages plus higher prices for gas mean big trouble for energy-dependent industries like heavy manufacturing. Plus more problems, of course, for the global food supply, already threatened by the disruption of wheat exports from Russia and Ukraine. Yet the new parliament, well, it's full of people who think that fossil fuels make normal modern life possible. It's all got to go. They're all got to go faster and sooner than it's possible to replace them. For more on the gas crisis that's hit the headlines today and the future of our fossil fuel industries, I'm joined by leading business and economics commentator, Terry McCrann. Terry, why are we facing this gas crisis in Australia?
Peter, we could get bogged down in the weeds of how the gas market works and what are the particular factors, the cold snap that's swept across Victoria, interruptions in various supply mechanics in the northern states. But the bottom line is very simple, as you explained. This is the first day in the rest of our lives if we want to stop using fossil fuels, in particular coal and gas. If you don't want people to use gas, you reduce the supply, you make it hard to build new supply, to find new supply. And this has been building for some years now, probably into decades, in preventing people actually finding gas, far less developing it. This is the outcome. And, you know, there are very specific factors, obviously, that have driven the immediate problem, what's happening with Russian gas and oil, and so on. But the bottom line is there's this huge demand for gas to fill those gaps in the energy sector. You look at South Australia. When the wind doesn't blow and the sun doesn't shine, they've got to get their power from their gas-fired power station. But all those things pale into insignificance in the long term unless we're prepared to allow more gas supply to come into the market for energy, for heating, and most importantly, as you indicated, for industry.
Look, you're right to remind us about the issue with gas exploration. It's banned, I know, in Victoria, but in many other gas-rich jurisdictions. We also have in Victoria a whole lot of councils today announcing they want regulations changed in relation to new properties. They want to ban gas heaters, gas stoves, gas barbecues, the whole box and dice. But do you think in the recent election, if people knew it was this bad, if within a matter of weeks, fortnight even, we're going to have spiking of gas prices and heating costs into homes, we know without the excise relief, petrol's going to go up, diesel's going up. We've got issues with trucks moving stock around. We know farmers are struggling with the cost of fuel to produce food. I reckon it's a lot worse than most voters thought, isn't it?
Well, it has. They haven't really felt the pain yet for two reasons. One, because those prices haven't flowed through in the main to consumers, to retail consumers, and secondly, because the market regulator has put a cap on the wholesale price for the moment, and you know whether that's going to be sustained, we'll have to see. But it's, as you say, Peter, it's not just gas. I mean, we haven't mentioned electricity. Electricity wholesale prices have gone through the roof because they are also driven by, at the margin, by demand for gas-fired power generation. As I mentioned, South Australia, but not only South Australia, New South Wales as well, in particular, and to some extent in Victoria. So that's electricity prices at the wholesale level have been sitting at an extraordinarily high rate, the highest rate it's been for at least 10 years. And so you've got high prices for energy, and that obviously doesn't only feed into bills, it feeds into the cost of doing business, and that in turn feeds all the way through the supply chain, the cost of transportation, the cost of getting stuff into supermarkets, etc., etc., etc. So the shock that's going to flow out of this energy price spike, and I use the term spike probably incorrectly because it's not going to go up and go down, is going to be dramatic. It's going to be right across the economy, and it's all going to flow through in the next 3 to 6 months.
Yeah, well, the government that just lost office was headed for a 26 to 28% reduction in emissions by 2030. The current government now wants 43%. Most of the crossbench want numbers as high as 60. We saw the issue with the demerger of AGL. A billionaire that thumps the table gets his own way. He wants now those coal-fired power assets to be shut down faster than was planned. And I have to say that's responsibly planned by the company. Unless we have a come-to-Jesus moment about the trajectory of climate commitments, you're saying this is the new normal. Exactly,
and that's been generous because it's the new normal in a much more intense and sustained pace going forward. We probably saw under the way politics is working in Australia, we probably saw the last coal mine open with Adani. There's not going to be another coal mine. It's just not going to be possible, both at the state and federal level, with Labor running the agenda in terms of emission cuts. Have we seen the last gas field opened as well? I mean, that's the really troubling thing. As a consequence, maybe Narrabri, New South Wales might sneak through, but when you add the two things together, the impact on supply of energy is going to be dramatically reduced, both in supply terms and consequently in escalation in price.
Yet out of the crisis in the Ukraine and the Russian gas issues in Europe, we've got the British Prime Minister saying that they will open new coal mines in Britain for the first time in 3 decades, and they're going harder on nuclear. And we're down here in Pollyanna thinking we can change the climate from Australia. Hey, I've got to get your take on the GDP numbers out today, 0.8%. That's the second straight quarterly rise, a little rise, but 3.3 over the past year. Today, the new Treasurer, Jim Chalmers, he sort of had a bob each way, saying that these numbers were terrible, it was all the fault of the Morrison government. Then he sort of said the figures were better than expected. So what's your take?
Well, actually, they are better than they look, Peter, because the actual 0.8 is a consequence of a big surge in demand across the economy coming out of the lockdowns in New South Wales and Victoria last year. And a lot of that demand leaked into imports. And there was a lot of inventory build-up. Businesses were bringing in imports and building up their stocks. So the actual demand dynamics were much stronger than that. But clearly Treasury overestimated growth, and it will have overestimated the positive impacts on the budget. So we've now got a budget that's going to, when the Treasurer gives us new figures, the deficits projected will be bigger than they were under the projections from Josh Frydenberg, and then you've got to add on all that new spending that has been promised, and all the spending that they've promised but they haven't actually included in the numbers. They've said it's capital investment. So when we get to that budget, it's going to look horrendous.
Well, I will come back to you. It lands in October, and we'll go through those so-called off-budget myth-making numbers off to the side, which we know are real. We'll go through that then. Thank you for your time, Terry McCrann.